let's talk about something, especially now that we are into spring just about. A lot of people are itching to play sports. You can also play stocks when it comes to sports. Let's invite into the stream Will Hershey. He's Roundhill Investment CEO and co-founder, and he's joining us now because your team launched MVP, the most valuable players, I guess I would call it, the ETF. Tell us how this works. It's only, about 3-4 days old. But how does the ETF work? What am I buying when I buy the MVP?
No, absolutely. And MVP, we love to have fun with our tickers. I mean, how much fun can you have with an ETF? You got to spice it up a little bit with the ticker. Really, we designed MVP as a way for fans of sport, but really just investors looking to get diversified, broad-based exposure to professional sports. And really, when you look at the underlying assets in the portfolio, we're really touching across the spectrum. So about 50% of the underlying holdings are invested into teams. So these are teams like the parent company of the Knicks and the Rangers and MSGS, Manchester United, Juventus, Dortmund. A lot of European football clubs are public and within the basket. Then we have apparel companies that people know and love. You just touched on Nike. They're a holding in the portfolio alongside Adidas, Puma. And then we have leagues. So WWE, Formula One, and you throw in some media companies and SPACs that are looking to acquire sports-related assets. And we think this is really a vehicle for, once again, sports fans or investors alike to really get exposure to the theme of professional sports, which we think is really kind of compelling as we look to kind of take advantage of this reopening trade.
Well, one of the big stories in sports today is the NFL media rights deal. It's worth over $100 billion over the next 11 years. Amazon, though, getting the Thursday night games really shows the power of streaming. How big of an opportunity do you think this is potentially when we talk about growth for the league? And then when it comes to some of your investments, some of the names that you were just going through with your MVP ETF, like Formula One, WWE, MSG, are you expecting more teams and leagues to go this route when it comes to streaming?
Yeah, absolutely. And I think that's a great point that we're talking about this just announced last night. Media rights continues to be one of the biggest driving factors in terms of league revenues. And eventually, depending on the revenue sharing agreements with these leagues, that will trickle down to the teams as well. But when you look at streaming, we actually just so happen to have launched a streaming ETF about a month ago as well. Ticker there is subs. I'd be remiss not to plug that too. But really, when you look at streaming and kind of the streaming wars that are going on, what is the killer app? What is your kind of crown jewel that you get to bring in new users and new subscribers for your service? We've seen that in the form of original content in the case of Netflix, in the case of Disney Plus. Now what you're going to kind of see is outside of original content, really going after pro sports continue to be kind of that crown jewel and really what can continue to bring in new users. The Amazon deal, which will see Thursday Night Football exclusively on Amazon Prime, I think came in at about $1.3 billion per year. So just tremendous numbers. And I think this is really important because we've been hearing for years about declining viewership across professional sports leagues, especially this year in the pandemic. And I think not having fans in person probably contributed there. But the shift from linear to streaming is going to kind of reignite the war for content. And we're just starting to see it play out now. I would also mention Disney Plus recently signed a deal with UFC. ESPN just signed a deal with the NHL. And now we have Peacock going after the Premier League. So it's not just the NFL, but there are bidding wars that are emerging throughout.
Let's go to something. Let's talk to the nerds, because you've got an ETF called Nerd that does esports, and I'm just looking here on my app. It's up year to date about 5.5%. By the way, you should go to the Roundhill Investments page. You can see all of the ETFs that these folk are offering. But tell us about Nerd.
Sure. So Nerd is, despite the fact we're bullish on sports, we're also bullish on esports. And I think esports is really targeting that next generation of sports fans. And Nerd is really designed to offer exposure to that entire ecosystem. So we're looking at video game software developers, companies that are making the hardware that gamers are using both professional and at the amateur level, as well as streaming platforms. And really what we saw last year, due to stay-at-home orders, due to the pandemic, was record levels in terms of video game engagement. And we kind of measure that by looking at what we're seeing on PC platforms like Steam, as well as record in terms of viewership. And the video game sector is really interestingly positioned right now. These companies have tons of cash on their balance sheet. We're seeing a lot of exciting IPOs in Unity, in Roblox with their direct listing last week. It's really kind of a secular trend. And capitalizing on changes in terms of where people are spending their time interacting with different forms of media and entertainment.
Well, I got to ask you about March Madness. After all, it is kicking off today, and you have a number of ETFs. One that we haven't even talked about yet specifically has to do with sports betting. And I want to ask you just about the tournament this year. We had our colleague Reggie Wade on the show yesterday, and he was talking about how we could see potentially over $1 billion wagered during the tournament this year. What does something like this, what does a big event like March Madness do for your fund?
Yeah, so March Madness, believe it or not, is actually bigger than the Super Bowl when you think about all of the wagers being placed on, however many games it comprises. I tried to do that math in my head, and that wasn't going to go anywhere. But really, when we look at kind of March Madness, I think over $1 billion, maybe $1.5 billion in terms of regulated wagers. But it's important to understand we're still in the early innings of regulation in terms of the U.S. market. Billions more are being wagered in offshore sports books, with bookies as well. In terms of the industry, this is going to be probably the biggest kind of single event we've seen. And a lot of that's being driven in terms of new markets that have opened up. We just launched in Michigan. Tennessee and Virginia recently started sports betting. And I think when you see these numbers come out and states that have not yet legalized, I'm here in New York, when they see these numbers come out and the potential tax revenues that they can derive from legalizing online sports betting and then legalizing potentially online casino, I think this is going to be a seminal moment for the industry when we see the numbers come out here.
All right. We wish you the best. Will Hershey, Roundhill Investment CEO and co-founder. And you can bet there's no subs when it comes to their ETFs, although I'm making a play on the names of all your ETFs. The MVP is the new ETF. Break a leg, guys.